Welcome to KTM Investing. Today we're going to cover the trade war and what savvy investors to profit from it. From smartphones to sneakers, electric vehicles to household essentials, the American economy is powered by global supply chains. And yeah, a surprising amount of it is still built in China. Despite geopolitical noise, many of the biggest US companies continue to depend on China for manufacturing scale, cost efficiency, and speed to market. Chinese plants operated by Foxconn and Pegatron produce the majority of Apple iPhones and Macs. Tesla's Shanghai Gigafactory is its most productive Tesla factory worldwide. Walmart sources from over 10,000 suppliers in China, and Nike, Amazon, Dell, GM, and Intel all lean heavily on Chinese factories to deliver global inventory. Why China? Because no other country combines infrastructure, labor force, and logistics like it. For decades, China has invested in high-speed rail, smart ports, and massive industrial parks to support this global machine. Jack Ma once said, China's supply chain is 30 years ahead of the world, and he is not wrong. China has this edge because their industrialization started long after America's. They were able to build when modern systems were available and did not have existing infrastructure to tear down. For the United States to transition to anything close to what China has built, we would have to revamp our subway system, our railroads, the location of airports and shipping ports, which would take years and an unprecedented amount of funding to achieve. That edge has helped make fortunes, not just for companies but for legendary investors who saw China's potential early on. Charlie Munger invested early in BYD, a Chinese EV company, which is now the largest EV company in the world. That single bet returned over 30 times what was invested and made Berkshire Hathaway billions. Ray Dalio has called China's rise inevitable, and he's directed billions into the region through Bridgewater. And Jim Rogers, former partner to George Soros, even moved to Asia to capitalize on the shift. But the story isn't without its tensions. Since 2018, and now again under Trump's 2024 campaign rhetoric, the US-China trade war has rocked markets. Apple's stock dropped over 18% during key tariff announcements. Tesla fell around 19% as new levies hit battery imports. Walmart and Nike both warned investors about rising costs and sourcing challenges. Yet despite the volatility, analysts believe a softening in trade relations, or the eventual end of this trade war, could spark double-digit rebounds in these stocks. Apple could see a 10 to 15% lift. Chip makers and EV companies might surge even more if Chinese manufacturing stabilizes. History has rewarded investors who think globally and play the long game. China's role in American profits may be evolving, but it's far from over, and the investors who understand that our futures are intertwined and invest with that in mind will ultimately be the winners. So the question remains, are you going to let the short-term political noise make or cost you money? Globalization cannot be undone, so either you take advantage of it or sit back and watch others get rich. What do you think? Are you going to wait it out and keep your money under the mattress? Or are you going to shop for value like you are at a Black Friday sale? Like this video, subscribe to KTM Investing, and stay tuned for global investing insights that can help shape your financial future.